Hello traders and welcome to the Market Open Preview. August 5th on a Tuesday, 2014 traders. Great to be with you, coming to you live from Pattaya, Thailand. Remember, this is brought to you through FXCL Excellence in Trading. Traders, what a beautiful day today in Pattaya, Thailand. Nice blue skies, nice breeze out there, white-capped waters, even that's nice, and white sandy beaches. All right, traders, it's a Tuesday. Monday wasn't too bad. We grabbed some pips in New York on Monday, which is unusual. I usually don't trade on a Monday, but looked for an opportunity and patiently waited almost 3 hours for my entry. But we did it, and it worked out. All right, traders, let me introduce myself to you. My name is William Gilday, and I am your moderator through the Market Open Preview Series that's brought to you every single trading day before the London Open. Traders, I started trading in 2006. After I retired in 2008 from an awesome career in the fire rescue department out of the great state of Florida, I moved to Thailand unexpectedly. Actually, I came here on vacation for 3 months to celebrate my retirement. Traders, it's 2014 and I am still here. Traders, I trade the markets every single trading day. I'm in it. I'm watching charts. I'm watching technicals. I'm watching it all. And I'm always looking for the opportunity to enter into the market and make profits. But as you know, we don't win all the time. That's just part of the business. We have to take some losses, and that's okay. Okay, let's get over to the legal stuff. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Traders, please do not trade with money you cannot afford to lose. Traders, also remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, traders, let's move over to news and commentary. Okay, let's take a look at the equity markets from the close after New York. The Dow 30 closed up at 0.46%, S&P 500 closed up at 0.72%, and the NASDAQ closed up at 0.75%. Now, when I was trading, and I traded about up until 11 a.m. Eastern, all these were in the negative, so New York afternoon must have swung around and did some good stuff. All right, let's take a walk across the pond. And the DAX closed in the red at 0.61%. The FTSE also in the red at 0.02%, just barely. The CAC 40 managed to stay in the green at 0.34%. The Eurostoxx 50 also barely in the green at 0.07%. And currently trading, the Nikkei 225 is down negative 0.37%, along with the Shanghai is down negative 0.35%. Hang Seng's in the red also, 0.13%. And the S&P ASX 200 out of Sydney, Australia is also down at 0.2%. Correction, that's 6%. And the Kospi is also negative at 0.53%. I'd have to say, traders, that is not a good way to start the Asian markets all in the red, but that stuff happens. So why don't we just take a second here and let's jump over and see what kind of news we had. We have, in approximately, well, actually 1 hour from now, we have the RBA rate statement. We're not expecting any kind of a rate change. They also have a rate decision at the same time, so we're not expecting anything. The biggest thing we're going to look for there is to see if they're going to be dovish or hawkish in their economy and what their statement says. All right, let's move down the charts here to the London session, and basically, I don't see anything high impact. We got some medium impact coming out. We got services, German services PMI. We've got services PMI out of the Euro, and we do have a high impact out of the UK with services PMI. Watch for that and mark that on your desk so you don't miss out in that. Moving into the New York session, traders, we only have one high impact, and that is ISM non-manufacturing PMI. and that's a half hour after the market's open. So that's what's going on. We do have factory orders coming out of the U.S., and that's about it, traders, as far as our news calendar. It is pretty active today, I have to say. So that is looking very well. So that's what's going on as far as data goes out. As far as my commentary for today, yesterday was not an easy trading day. It was Monday. It was after NFP, and the markets just were so sluggish. I was doing a live trading room during London lunch, and the euro had moved like 18 pips in like 4 hours. I mean, just stuff like that. That was absolutely crazy stuff, right? The other thing I wanted to mention about is that the Aussie dollar, be careful if you're trading the Aussie dollar. This pair has really been like all over the place. It's up, down, it's all around. It's not following any technical move. It's not following any fundamental move. So if you're going to trade the Aussie, my suggestion to you is, and I put a newsletter out this morning, my suggestion is if you're going to trade the Aussie, don't leave your computer. It's not one of those pairs where you can, say, tally-ho, let's go, and away you move. You can't do that with the Aussie, my friends. It's just really wild, and you just need to protect yourself. So until you break even, you're going to have to stick with it. And that is the way it is, right? All right, that's my news and commentary for today, August 5th. All right, let's go over to the Forex charts. We got two currency pairs to take a look at today. First one we're going to talking about the Aussie. Here we go. It's about the Aussie New Zealand, and this is a daily chart. And this is kind of mixed, but my bias is going to stay to the long side. And the reason is, of course, we are currently above the 200 exponential moving average at 1.0908. You can see the last 2 days has given us higher highs and higher lows. That red candle is today's current candle. So I am looking for this to go long. So my bias on a lower time frame charts is to go bullish on the Aussie New Zealand. All right, let's take a look at the Aussie New Zealand on a 60-minute chart. This one's a little different because look at this. We're squeezed between the 200 exponential moving average at 1.0942 and a trend line that's only a two-touch. I see that, but I have to recognize that I got to be honest with you. If you look at those candles in that little wedge there, there's a lot of inconsistency there, a lot of indecision candles there. So my suggestion is let's not trade this till we get up to about 1.0960 and we're above this mess and this range. But, we're at strong support and we expect the bounce, and I expect this to resume to the upside. And we're looking to, head up to 1.0994. So, what do you say? Let's do it. And I think that's a really, really good idea. Okay, let's take and realize, traders, that the 200 exponential moving average, right below it would be your stop. That's where your stop would go. There's nothing else you can do there. It's just got to go below the 200 exponential moving average. All right, let's buzz over to the Aussie New Zealand on a 15-minute chart. Now, I know what you're saying. You're saying, William, this is bearish. Well, it sort of is bearish, and I have to agree with you, but it's in a range. I didn't shrink these candles down. When I show you guys charts, I like to show the chart as I see it. If you shrink the candles down, it sort of gives what I would say not an accurate picture of the chart. Now, if I was trading this and I was getting into a trade, yes, I would shrink the candles down. But I want you to see this because I want you to see all these indecision candles. But due to the daily chart, I want to go bullish on this. So I'm willing to sacrifice not getting in the trade on this 15-minute chart until we get above that 200 exponential moving average. And if you look at the bottom of the chart, you can basically draw a three-touch trend line to the upside. So again, this one's also in a wedge if you look at that. But yeah, we just want to take this to the long side. And traders, it's possible that on the daily chart, this is going to come back to that 200 exponential moving average, and this can move down. So it's not like in stone what direction we're going to go in today, but my bias would be if we're going to enter into this Aussie New Zealand, we surely want to head into a buy trade. All right, traders, let's head over to the pound yen, the good old beast. Beast looks good today. I just happened to pick it out because we haven't talked about it since last week. And this is nice trend line, nice 4-touch, 5-touch trend line, 4-touch trend line. On the daily, up right the last 3 days, higher highs, higher lows. We like to see that. So my bias is let's buy the pound yen. All right, let's take a look at the pound yen on a 60-minute chart. Again, here we go. Williams giving you 2 trades here. The reason is because that 200 exponential moving average on a 60-minute chart on this beast, the pound yen, is pretty significant. And I don't know if we're going to get above it. So right at the moment, unfortunately, we're almost 3 hours before the London Open, and I wouldn't be wanting to jump into anything right at the moment, but there's a good chance this is going to continue to the downside. The only thing that's positive is if you take a look left of the chart, all the way left of the chart, you can see we're at substantial support here, but we definitely like to see this get above that 200 exponential moving average. If you were to take it here at 173.95, yeah, you're not. Nah, this isn't something to bite on here. We just got to wait to either take it to the downside or take it above the 200 exponential moving average. All right, let's take a look at the 15-minute chart a little bit more clearer. 15-minute chart, I've got this as a buy. We just want to buy this. We want to take advantage of this 200 exponential moving average at 172.91, and we're just going to take this above the 200. That's support. So let's take advantage of that bounce. We'd like to see this give us a bullish candlestick formation, and you know what? Let's go. Let's get in it and take this up for the ride. And of course, at 173.17, you know, you'd have to be a little weary because we do have some resistance a little bit left to the chart, but I don't think that's going to be an issue. And I think as long as those Bollinger Bands stay open, we must keep those Bollinger Bands open, we have a very good trade set up there. Traders went a little long today, a lot of data to talk about, and wanted to really explain these charts thoroughly to you. Traders, on behalf of myself, William Gilday, and our great friends, FXCL Excellence in Trading, I'd like to thank you for joining me today. Traders, have a great trading day, and remember, we give this to you every single trading day before the London Open. Traders, grab them profits, and we'll talk to you tomorrow. Take care, and bye-bye.